Thanks for joining us. This is Notepad with me, Ibrahim Sani. We're going to cover the mini segment on my show Notepad called the Economics of Elections. And of course, we're not just covering about the economy per se, but of course everything regarding the markets, business, and of course corporate Malaysia. Joining me in the studio is Anand, Pathmakanthan, the Head of Regional Equity Research at Maybank Investment. Of course, we're looking at the recent report, Anand, that was published by Maybank Investment that talks about the strategy moving forward when it comes to the elections, the permutations that surrounds it, and of course, what would be the pricing strategy that revolves around it. Maybe we can do a top, overview of this research report and what it covers.
Sure. I think the starting point is the fact that this is going to be an exceptionally interesting elections, and the market has pulled back into a defensive mode given the elevated uncertainties about this particular elections. And there are two reasons why we think it's going to be particularly difficult to predict the outcome. One is we've seen a massive increase in the number of registered voters. You have Undi 18, you have automatic voter registration. So the number of actually registered voters have increased by more than 40% compared to GE15. So GE15 is going to be a whole new kettle of fish when it comes to how voters will decide on the candidates they want in Parliament. I think the other issue is the fact that we expect a lot of multi-cornered fights. In GE14 you had predominantly hit-on fights between Barisan Nasional and Pakatan Harapan. This time around, you have three coalitions. You have Perikatan Nasional in there as well. And there's a lot of disagreements, even within coalitions, as to who should be competing in various seats. And then you have newish parties like Muda as well on the scene. So we could see a lot of multi-cornered fights, and that makes the outcome even more unpredictable. Yeah.
The KLCI saw net sell by foreign investors, and of course the net purchases are domestic buyers, both in-state and retail, and this has driven the markets actually quite low towards below the 14,000 psychological mark. How is this going to shape up moving into the elections?
Yeah, so there's a lot of moving parts when it comes to market direction and market movement, especially of late. Elections are obviously one big factor, and we expect at least domestic investors to sort of be a bit more defensive until there's a clearer view on the outcome of the elections. But on the foreign side, year to date, actually, we are still seeing net foreign buying. Recently, that has turned a bit negative, primarily because of external factors. So we're seeing much more concerns about a global recession, given the rate of interest rate hikes in the US. And the geopolitics as well, Russia, Ukraine, US, China, has turned a little bit more sour as well over the last 1 month. So that is really pressuring the markets. So we wouldn't be surprised if the market continues to struggle for the next couple of weeks into the election period.
My biggest question is on the problems between not problems, I guess, a scenario where states are not dissolving their own seats. Some states are doing it, most states are not. How does this play into the general or wider consensus of how investors should look at the markets?
Yeah, I think it just underscores the amount of disagreement about the timing of these elections. I mean, the opposition definitely doesn't want it to be held now. And they've used the monsoon season as an excuse. And I think this refusal to dissolve their state parliaments, especially in Penang and Selangor, reflects that disagreement. For us, looking at the market is really fixated not so much on state legislatures at this point in time, but more the federal competition, or federal level competition, as who's going to run the government. Because the issues facing Malaysia are not state level issues. Yeah, they are federal issues and national issues, such as the fiscal deficit, also corruption. Those are issues that are really going to be solved by Parliament, not state legislatures. So I think for us, our focus has been on scenario analysis at the federal level in terms of the 222 parliamentary seats up for competition. And we've come up with 3 scenarios. Okay, let me go through the scenarios. So the first scenario is really the status quo. We've come up with these elections with a BN-led coalition winning a plurality of votes, but not a majority. So they will have to get into a coalition, perhaps the same partners they've had before the elections, PAS, PN, obviously GPS as well, to form a majority government. So you'll pretty much end up with what we have now, or what we had pre-dissolution, similar sort of government. Yeah. So not ideal, but some sense of stability, some sense of we know
continuity,
what to expect.
Perhaps.
Correct, continuity. We know what to expect. It may not be the best outcome, but at least there's continuity. The second scenario is a little bit more interesting. That's where you have BN together with GPS being able to capture a strong, simple majority. So they don't really need any other coalition partners to govern. And that would be also a stable government. But I think that government would be better placed to push through uncomfortable reforms, reforms that are long anticipated but have been delayed because of political considerations. Stuff like widening the tax base.
Like GST.
Like GST coming back. Not a mention in budget 2023, but we all know we need to widen
it's
the
coming
revenue
sooner
base.
rather than later.
Exactly.
Widening tax base, where we have a big problem of narrow tax base right now. 20%
Way too
of
narrow.
Malaysians are.
Yep. The other part is the spending part. Obviously, we've got to roll back subsidies.
That's a tough one.
That's a tough one. So you need a strong government that's able to explain
or at least
the necessity of that.
institute a more targeted subsidy policy. I don't know how they're going to do it.
Yeah. So that's the expectation. Frankly, we've heard about a targeted petrol subsidy for decades in Malaysia. It has never come around or come to pass. I mean, obviously, if it was easy to do, we'd have done it years ago.
Yeah.
Because it is completely sensible economic policy. But it is not easy. So it'll be very interesting to see how whatever government is formed after the elections tackles that issue.
All right, but you're saying that the second scenario with GPS and BN, they would be better placed to institute these tougher measures.
They wouldn't have to pander so much to other coalition partners, and they'll be able to focus on the long term, which is really lacking now in the government. Unable to focus on long term.
All right.
It's all about the short path, but the short path is not the right path. It is just gratuity now, but we're not dealing with long term problems.
And the third scenario?
Third scenario is the outlier scenario, I must admit, where Pakatan Harapan wins a simple majority. So the Anwar-led Pakatan Harapan comes to power. That's going to be interesting for the markets, and it'll probably be a knee-jerk negative reaction.
I've had the same discussion in GE15 about this particular conversation with another research analyst, perhaps your competitor, and this individual said that also presents to me three scenarios, and the third very unlikely scenario, and it was the unlikely scenario that took place.
Yes.
So, never rule them out.
No, never rule them out.
All right, go on. Sorry for the interruption, your third scenario.
But you're right, it's an interesting coincidence that, the odds were stacked against them in GE14 as well, and they won. This time around, it's a bit more of a fractious situation, even within Pakatan Harapan. But if they do win, and Anwar becomes the next Prime Minister, the markets will be a little bit nervous because when Pakatan Harapan was in government, they had a few controversial policies, which the market was not too impressed with. One was complete refusal to even entertain GST. So they took GST off the table.
Not even zero-rise it.
Not even zero-rise it. Took it completely off the table, even though it was probably the most efficient way to widen the tax base. They also revisited a lot of contracts, large infrastructure projects that the previous government had avoided. So the reopening of these contracts also injected a lot of uncertainty into the corporate sector. And the market will be looking at things like Tenaga, will they pursue liberalization of the electricity market like they were planning to do before the Sheraton move? Telecom, the rollout of 5G, will they continue to go with DNB or will they want an entirely new structure? So all those kind of uncertainties will suddenly reappear if Pakatan Harapan is in power. Now, the ultimate outcome may be very positive for the country. Maybe. But in the near term, the market will be quite nervous about what changes will be made.
Okay, what about sectors? Are there any sectors that we need to look at that might be more vulnerable in terms of the changes coming in from the GE?
Yeah, there's some interesting permutations on sectors. So I think scenario 1 and 2, where you have continuity in a sense, especially scenario 2, where you have quite a stable government, we think the construction sector could be interesting. Some projects which have been shelved as of now, like Singapore, Malaysia high-speed rail, even Bandar Malaysia, may make a comeback. So that could be quite stimulative. That could be quite exciting for the corporate sector. Obviously, funding, etc., would have to be sorted out. But the point is, we're probably going to see a government which will want to potentially bring back those kind of projects. Also, as I mentioned before, the thornier or more difficult issues like GST and subsidies may be dealt with sooner rather than later, which is crucial to maintain the country's fiscal integrity. I think when we look at budget 2023, it is a big giveaway budget. It's a huge deficit still, and we really need to get our spending and our tax collections under control before the next 1 or 2 reviews from the debt rating agencies. So I think a solid government from that perspective would be able to do that. That may have some implications. Obviously, consumers will suffer a little bit from reduced spending power because of higher taxes and reduced subsidies. But a lot of the staples, we believe, like foodstuffs, etc., will be zero-rated anyway under GST. So when we run scenario analysis of stocks that do well around elections time, 3 sectors stand out: financials, consumer staples, and healthcare. So they're quite defensive.
Okay.
And those would be how we would be positioned going into these elections.
Having said that, the 3 sectors that you mentioned revolve directly in terms of governmental policies. They are less on the private companies running it. It's more them running the show based on what the government policies are. And of course, the wider economic policy also evolves around, say, inflation or consumer spending, more money that is being put into the government's, into the people's pocket through subsidies. Do you feel that these 3 sectors could be negatively impacted if, let's say, scenario 3 takes place instead of scenario 1 and 2?
Yeah, I think under all the scenarios, just to be clear, we do expect the government to maintain quite a generous view on B40 and M40 support.
Okay,
especially
regardless of who comes to power.
Regardless of who is in power. Yeah, I think after GE15, there was a move by Pathmakanthan Harapan to revisit a lot of the subsidies as well and cash transfers, and that didn't work out very well for them. Let's be honest.
Political popularity, you mean?
Correct.
Okay.
Yeah, so that they will probably be a lot more careful about something like that going forward. So I do expect cash transfers to continue, but perhaps in a more targeted, reduced format, because you're no longer, sort of transferring pre-elections. You're doing it with a fresh mandate, with a 5-year runway. So that's not in debate. But yes, I guess when you look at banks, right now things are going quite well for the banks. A lot of people say banks maybe they should be contributing more to national issues, etc. When banks do fulfill an important criteria in any economy, it's always very not sensible, really, to disturb a well-functioning financial sector, which is what Malaysia is right now. And that should be left, really, for Bank Negara to regulate more than the government. So I think there will be some temptation, but I think they will resist it. Yeah, the budget 2023 did not have any sort of negative connotations for the banks. I think that's a signal from the government that they recognize the importance of banks. And to leave them to their own devices and let Bank Negara do the regulating. It's not the politician's job to do the regulating there. And I think for healthcare, it's something that is fairly neutral under any political outcome, because we all want a more robust healthcare system, and we want a healthcare system that can be recognized internationally as well. Yeah, we are giving up.
Already it's been recognized internationally. The question is on how do we manage, say, development spending rather than operational spending.
Correct. I mean, we're missing out on a major source of income for health sector, which is medical tourism. Yeah. We talk about it, but it's...
Yeah, I was about to, I just had a few guests over medical tourism this, medical tourism that.
Compare the stats to Thailand and Singapore. We are the
laggard.
Ugly sister. Yeah, we are way behind. So they both found their niches, and they're well recognized and marketed in the West as well as regionally. But Malaysia is still struggling. I mean, we've talked to some of the healthcare players here. Yes, they talk about medical tourism from Indonesia, maybe some other parts of Asia, like maybe India. But we haven't found the niche for ourselves in terms of, is it going to be high margin operations like in Singapore, where it's cancer, neurology, or is it going to be sort of aesthetic based like in Thailand? Those are 2 very well known hubs for those kind of procedures. What is Malaysia famous for? You can talk about the cost element. We're cheap. But I don't think that's the only thing that will resonate with people who are looking for medical treatment. They will need to have infrastructure, and marketing as well of that infrastructure.
Yeah, one such organization is like the KL Wellness City. They might want to do something interesting there, but then they can't meet their completion target because of the construction sector being halted. They can't find foreign workers. See, it's like everything is connected to one another?
Yeah, I mean, the human element is a big part of it, but also infrastructure. I mean, why do people like flying to Singapore or Bangkok?
Everything is easy.
Everything's easy. Medical tourism, you get off the plane, you're 30 minutes away from your clinic or your hospital.
Yeah.
Malaysia, the connectivity to Kuala Lumpur is not great. It's nowhere compared to the hubs of Bangkok and Singapore. And the distances involved, in terms of getting to the facilities is a lot longer and is a lot less conducive to someone who is, requiring medical care, you want things to be as seamless as possible. Yeah. So I think those are issues that we probably could do a better job addressing.
What about other sectors like gloves or media, oil and gas, petrochemicals? Would these sectors face any sort of headwinds moving to the elections?
Yeah, most of them we think would be fairly neutral. I mean, something like, say, technology, we continue to think that will be a focus area for any government.
That's
in
right.
terms of
I agree.
incentives. Yeah. I mean, if there's one sector that has consistently done well for Malaysia, it is the export sector, and that's primarily E&E. Also petrochemicals as well, through something like Petronas Chemicals, excellently run company, doing very well for Malaysia. So I don't see them messing around there. I mean, oil and gas, again, it's been a big cash cow for the country. You generally don't mess with a cash cow. I mean, of course, dividends from Petronas is something that will be decided on a year-on-year basis.
Still 25 billion to 50 billion, that's a big chunk for this year.
Correct. Yeah, I'm always a bit skeptical when they announce the expected dividend from Petronas in the budget, because in the last 3 years it's always been increased. Yes, dramatically. So it'll probably happen again. I mean, Petronas is sitting on 100 billion plus ringgit of net cash.
Still.
So there is scope for that. But the point is, we don't expect the government to interfere with how the oil and gas sector is run, because it is doing fairly well, and it is a key crutch for fiscal revenues. So for other sectors as well, media, we don't really know so much. So as I mentioned before, where we do see potentially some interesting dynamics, construction, the utilities like Tenaga, Telecom, which are also very political in their own way.
Plantation, if we go by that standard, right?
Yeah, Plantation, big employer, a lot of ESG issues. I think any government that comes in may want to take a more active role in dealing with those ESG issues, especially on the treatment of labor. Frankly, when you look at the ESG landscape in Malaysia, the single biggest issue for most corporates is how they are perceived when it comes to treatment of their foreign labor forces. And in Malaysia, it's a big deal because there's foreign labor everywhere. There's construction, manufacturing, plantations. So, the hope is we'll have a more cohesive sort of response to things like treatment of foreign labor, human trafficking, etc., where we don't rank very well at this point in time, and that has a hidden cost for businesses. We don't see it immediately, but investors will not want to be associated with a country or businesses that can't get their labor treatment act together. Yeah,
they can't. Like gloves, for instance, they're constantly being punished by the US CBP. But there are some, acknowledgement into how they can solve those problems, but the problems still persist.
And they take a long time to solve. Once you tarnish your reputation, it's very difficult to get it back because your potential buyers, be it gloves, be it palm oil, they'll just say, do I really want to get back into this given what has already happened? Look at Dyson, they pulled out of Malaysia. Are they going to come back just because we say we've cleaned up our act? Probably very not. Unlikely. They're going to say, no, I don't need to take on this risk. So, we shouldn't underestimate the damage being done by these kind of headlines in the West and globally for Malaysian corporates.
The three scenarios that you shared earlier, what would be the likelihood of either of the scenarios panning out? What would be some of the considerations that you put into place in terms of trying to figure out what is the least likely, what is the most likely?
Yeah, I think we obviously keep track of political news flow on a daily, weekly basis to sort of try to suss out which way things are going. We keep in touch with all the political polls. But we are a little bit skeptical of those because the polls before GE15 were saying a very different thing from what the outcome actually was. So I think you're getting the picture here that, as I mentioned before, this is an exceptionally difficult elections to call, given the multi-cornered fights, given the huge increase in registered voters. Personally, I mean, speaking purely objectively from a market perspective, we all want a stable government. It doesn't matter which government it is, as long as it can prove it has an ability to rule without any more volatility and without the need to pander to a whole host of vested interests to stay in power, so that they can make the difficult decisions that have been long overdue for the country. That's all we want as an investor and as a market. Personalities-wise, I have no comment. That really depends on the outcome.
Okay, I also want to touch on the whole idea of the timing of the elections. A lot of conversation is put into place into why the budget was brought forward by 3 weeks. There's a lot of anticipation that the election is going to be called right now. It did. However, there are some other conversations into why now, why not later in the year, why not later in the in the term, meaning earlier part of next year.
Sure.
The timing of the elections being called now, how has that impacted the markets moving forward?
Yeah, it does sort of indicate a return of the sense that we had at the start of the year after, UMNO-led BN won sweeping victories in Johor and Malacca state elections. There was a sense that, all right, they're on a roll. They're going to call elections. We're going to have a UMNO-led government or BN-led government coming in, which will be quite stable. Then in the interim, there were a lot of issues which sort of eroded that scenario. But now we've come to a situation where, we've had the Najib court case behind us now, and there's a sense that given all the infighting among the other alliances, in the political spectrum, that BN will have a pretty good chance of coming up the clear winners in GE15. So I think that's why we've seen this rush to call elections. So when you talk about scenarios, scenario 1 and 2, where an UMNO-led BN being in either a simple majority or a strong majority, probably seems to be what the current or the caretaker government is planning or thinking they can achieve. Or else they wouldn't have called the elections so much earlier and courted so much controversy because of the monsoon.
Right, yeah.
You're still doing it, so they are confident. So under those two scenarios, I guess the market is looking for continuity, and we would think, especially under scenario 2, that would probably be the best outcome that the market can hope for at this point, purely on the numbers and the stability of the government. Subsequent policies, we have to wait and see.
Okay. Rolling back to short-termism a bit, looking at the next 2 or 3 weeks to come, in your report you did say that you guys expect the market to adopt a cautious wait-and-see attitude leading up to the polling day. So what does that mean? That means muted transactions. This morning I was checking out, it's 400 million shares done at 10 o'clock. It's very, very slow day at the office.
Yeah, investors are asleep, right? I mean, they're hibernating. Frankly, market trading volumes have fallen off about 40% plus year on year.
Year on year, maybe, but this morning it just fell off a cliff.
Yeah, and there's no reason to think it will revive in a big way ahead of elections. As I mentioned, nobody will invest with this much of unpredictability in the pipeline. And there's a lot of things happening overseas as well.
So could there be a bargain buy then?
We think, based on our own valuations for the market is trading at less than 12 times forward earnings now, which is really cheap by historical standards. By historical standards, I must give you that caveat. I mean, history is no guide to the future, obviously.
No, of course not. You have a 3-pager disclaimer to your 1-page research report that says that.
We might have to make it 4 going forward, depending on what happens in these elections.
Yeah.
But the market is looking cheap. And our own index target is 1,500 by the end of the year. The index is now at 1,004, a bit less, 1,380.
Yeah.
So we are seeing
1,005 by the end of the year.
Yeah, trust me, when I first came up with it in July, people thought I was too bearish. Now I'm too bullish. But the point is, after elections, if the most likely outcome is scenario 2, there should be a bit of a relief rally.
I can imagine working in your office. You must be facing a lot of debate there.
Weekly. Everyone has a view. This is politics.
Yeah.
Tune into any radio station. Everyone has a view. But the market will just wait and see. But if scenario 1 or 2 pan out, there'll probably be a bit of a relief rally after the elections. And hopefully some of the...
But the next 2 or 3 weeks, it's just going to be slow.
No. We don't expect anything in the next 2 or 3 weeks from this market. We think it'll just be sideways trading. Yeah.
What about the continuity of foreign net sell? Is that going to happen?
Yeah, that's driven more by external factors, what they think the Fed will do. And the Fed has got 2 more meetings, November and December.
Yeah, 1st November, 2nd November.
Yeah, so they've already raised interest rates by 300 basis points.
Yes.
Bank Negara is raised by 75 basis points.
Contrastingly, China has not moved their rates in the CCP meeting.
Yeah. Turkey has cut rates. They are a definite outlier.
Yeah.
But the point is, if the Fed raises another 75 and another, say, 50 or 75, the gap between what the Fed is doing and what the rest of the world is doing, especially Bank Negara, is going to be massive. Yeah, so that's going to have a currency implication as well. And that's going to have an implication for foreign investors. Do I want to be invested in currencies which are susceptible to further depreciation against the US dollar? Probably not. Yeah, so there's a lot of external drivers to what foreigners will do with their investments.
It's 5.0 to the pound sterling, so that's...
Yeah, I mean,
Liz Truss is not the issue that we need to talk about, but
point. I mean, we get a lot of excitement and angst about ringgit, US dollar, but frankly, when you compare
sterling ringgit, I like that.
Compare ringgit, sterling, ringgit, euro, ringgit, yen, the ringgit has actually done better.
Yeah.
the ringgit is only depreciated against the US dollar and, of course, our good friends, the Singapore dollar.
Yeah.
And that will probably continue to be the trend.
Friends, let's just go with that.
I was just being ironic. Probably be the continuation of that into 2023 because there's no way ASEAN countries, ex-Singapore, will tighten as much as the Federal Reserve. Yeah.
So a lot of market movements, a lot of disparity that is anticipated from the market.
Yeah.
And of course, locally, Bank Negara has one more meeting, right?
One more meeting in November, yes.
Oh my God. Okay, and because of that, there's a lot of wait and see, not just because of GE, but because of the wider economic implication as well.
Correct. And we don't really know if Bank Negara will move in November. We expect a 25 basis points increase, given the gap I just mentioned. But now it's politics, right? Will it be a political issue if they raise interest rates, in November, assuming it happens before the elections?
Unfortunately,
even
when it's not.
Yeah. So even that is uncertain.
Final question: would the markets look at the voter turnout and what that means to the government that is voted into power?
Yeah, I think generally the market's view is, any disappointing voter turnout would be in favor of Barisan Nasional.
Okay.
I think that's the conventional view.
Yeah.
As I said, voter base has increased by 40% plus.
Yeah.
So I wouldn't be making any bold predictions about what voter turnout in percentage terms would mean for any particular party. But the conventional thinking is, as it has been the case in Malacca and Johor for the state elections, disappointing voter turnout has been blamed for the poor showing by the opposition. And if it happens again this time around, they will probably want to look for a similar sort of rationale in terms of if the opposition does badly. But I'm not so sure because multi-cornered fights, huge increase in electoral roll. I don't think conventional wisdom is something we should cling to when it comes to GE15. We just have to wait and see how it pans out. Yeah.
You sound exactly like the research report.
I do. That's why we have 3 pages of disclaimers. But I think, hopefully I've given you good reasons why this is an exceptionally difficult election to call, given the fact that the alliances on both sides are so fractious.
Fantastic.
And you have 21 million voters compared to 14 million voters just 5 years ago. So, you don't see that kind of expansion in voters ever.
Yeah.
This is exceptional.
I really don't know what else to add. On that note, perhaps that's a good way to end. That was Anand Pathmakanthan, the head of Regional Equity Research at Maybank Investment. There's a lot more that is in store for you, so do stay tuned on Astro AWANI as we bring you more information and more interviews like this. For now, this is me, Ibrahim Sani, signing off.